You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good morning, everybody. Bigbeat is back. Hello, hello, hello. Look, the markets are still pushing higher on the chances that tariffs will be going away. No, wait, they're not. They are. They're back July 9th. Who knows? It's coming up July the 4th. It's Independence Week. Just so you know, the markets will be closing a little early today, 1 o'clock. So expect a little bit of quietness as everybody's already on the road. Trust me, I know. I was just out there. And the world of trade of getting around is not so easy right now. The airports are not jammed up, especially international travel. International travel is down. I can't believe it. I was in Ireland over the week, and I can tell you that there were empty seats all over the planes on both sides of the Atlantic. International travel is way down. If you don't know, you got to get an ETAS and ETAs. That's causing some confusion. Obviously, there is a little disdain for the president for the United States of America, so people aren't coming as quickly as much and not spending nearly as much. And we're seeing that now in the dollar. The Dixie 97.21, a little bit of a pop there on the backs of those job numbers coming in. Those job numbers looked a little bit better than expected, but they were murky at best because, quite frankly, the education numbers are coming in. Those education numbers were not normal. Something a little bit cool. What I'm seeing is a big jump in government education hiring. I don't know that state government education up 40,000, state government non-education is up 7,000, local government education up 23,000, local government non-education up 10,000, and federal government education down 7,000. So I don't know if that's just a move. We can't really see that right now. So I would not even touch these numbers with a 10-foot pole. All right, let's get right to it. The question mark around Powell is getting bigger and bigger and bigger as Trump is now saying he's looking to find somebody else to replace Powell. He's already in the midst of it. Powell has already gone back on the defense saying, look what I did. I've saved the union. I don't know. Both sides seem to be a little bit off. I don't know what's going on here. It seems to be that this is a tit for tat. Quite frankly, not good for the markets. Now, the markets have been pushing up. I don't like this, and we're going to talk about that today. One of the things I wanted to talk about specifically was the Buffett indicator, and we'll go through that a little bit today. Buffett calls the one indicator the Wilshire index. Now, the Wilshire indices. I'm going to pull that up best I can do that. All right, I'll see if I can't present this to you guys so you'll see exactly what I'm seeing here. I will share that screen with you. This is the Wilshire 4,500 or the Wilshire 5,000. Either one will work. Quite frankly, you can see that in this system here. Look at that drop. We saw it over the last few days. But if you take the Wilshire index, Wilshire 5,000 or 4,500 in this situation, and divide it by the GDP of the United States, you will not get a very good number. In fact, you'll probably get one of the worst numbers in history, and I'll share this tab. If you don't, you need to do it. Please, for the love of God. Okay. If you can see here, I will pull it up in the highlights here so you can see it. The Wilshire index. This is it right here, the Buffett indicator measure. Now, when I wrote this yesterday, I want to make sure everybody understood what it is. It's more of a macro tool. You can see it's a macro evaluation tool. Hopefully you can see that there. Yeah. Right now, during the 2009 bottom, that was when the market crashed. And it's not the housing market crash. I remember that. But we saw this was below. It fell below 70%. That's not too good. Pre-dot-com bubble. Okay, so this was the big one. High valuation was at 140%. Now we know that we want to get it right around 100. That's where the demarcation line is on this. And where are we today? Where is it now as of latest? 186 to 190%. We are so close. And the dot-com bubble's at 140%. So we are so far above the norm, it's not even funny. Now, when people ask me, oh, well, the markets are going higher, markets going higher, markets going higher, markets are going higher. Okay, they may go higher. They're going to stop it. I totally understand that. All right, great. You can tell me that all you want, but I'll tell you this much. I am not in the market right now. I am just trading. I made quite a bit of money over the last few days trading the nonsense of Tesla, Elon Musk, and Donald Trump. And that's what I've said. Take. I'm up 64% in this last month in my trading account. That's crazy. Why? Because I'm not even looking at charts, to be honest with you. If you're looking at charts right now, you're missing the boat. You're probably getting 5 to 10 to 20% this month, not 65%. If you're ignoring the noise, you're doing very well this month. You're doing extremely well, because what's happening is, even if markets are falling, they're popping right back up. And that's what I'm doing. I'm just literally just adding, or I am trading it. I have a normal account that I consider the bigger accounts, and that's where I'm at right now. But I'm not trading this based on any chart. And I've been saying this for the last few months. If you're trading this market based on charts, you're probably getting crushed right now, or you're confused, or you're nervous, or you don't know what to do. I haven't been nervous in the last few months. Not one bit have I been nervous. And why? Because it's easy. This has literally been, if you are a long-term seasoned trader, you are not looking at your charts. Okay. I know that there are going to be a lot of chartists out there go, that's nonsense, Steve. You should always look at your charts. No, you really shouldn't always be looking at anything all the time, every time. Not even just news all the time, or charts all the time, or none of that. I am saying it's a mixture of everything, right? I've always said that, right? Look at your charts, look at your news, put it all together and create a thesis. Okay. Right now, if your charts look the exact same thing as they did 3 months ago, you're doing it wrong. And I'm telling you right now, because volume has come down. The news cycle has slowed down, right? Because we're not seeing as much when it comes to the wars, Iran, the issues now. I mean, oh my God, the geopolitical issues are still there. None of it, right? Because the market's still going up. If you were looking at charts, the charts should tell you we're toppy. All right. And I put this and I posted that the charts are very toppy right now. But that's not what's pushing the markets. All right. So Bigbeat, the news is pushing the markets. Nope, it's really not. Because there isn't any news right now. The news is slowed down. We just said that, right? So what's pushing the news? What's pushing the markets? What's pushing the charts? All right. I'll tell you exactly what's happening right now. We call it window dressing. At the end of the month now I'm going to give you some inside baseball that probably Wall Street's not going to tell you exactly what's happening. Why did the market go up on the 30th? Shouldn't it go down with all the options? Why did it go down on the 1st? Well, because they want to show the big boys, the institutions out there are wanting to show you that they have a lot on their plate, that they are invested in a lot of tech stocks, they've invested in a lot, and they got all kinds of things. Okay. What happens the next day after that? All the options get peeled off. They blew through the options. If you're playing zero DTEs right now, you are literally getting destroyed. Yeah, you may be getting 1 win or 2 wins, and that may be winning. Oh, that keeps me alive. That's not what we're looking at. That's not why you're not up 64%, right? You're not up there because you're paying attention to the nonsense. You're listening to wrong people, and it's okay as long as you correct it. All right. And we're going to correct this for you right now. And I've seen this quite heavily right now. When I've been watching and I've been saying, when NVIDIA got under 100, talking heads were saying, oh my God, NVIDIA is going to hell. It's done. It's over. There's no more AI. We're almost done with quantum computing. It's over. We're not going to need them anymore. Nope. Wrong. Quantum computing is up the most. I looked at one stock was up 6,000%. NVIDIA went from under 100 to over 155. That didn't take you a chartist to figure that out for you. That didn't take you any news, because there was no news coming out. There was no tweets coming out, and some mean tweets from Trump saying that NVIDIA is fine. Why did NVIDIA go up? Because it was the mispricing of pricing. Okay? That's what I'm saying to you. You need to understand, as a trader, we need to have gut instincts. It's not always about, Oh, anchored VWAP. Oh, Bollinger Bands. Oh my God, you've got to have these things. No, you do, but it's one piece of the puzzle. It's not the answer to everything of how you trade, how you make money. So I'm going to give you some answers today. Things that people don't tell you on the inside of how it really works. Is your chart on a 3-minute chart? A 3-hour chart? Nope. That's what Wall Street uses. So all of a sudden your charts are off. Now, I talked to Carter Worth about 2 weeks ago. Why do people have 200-day moving averages on their charts? You know, it's very simple. The answer is very, very simple. On their charts, they have 200-day moving average because that's the default for most companies. Charting companies, S&P, Chart IQ, whether it's TradingView, you name it, they're all the same. 200-day moving average is the default. That's why it's a big deal. That's the only reason. That's not the answer. Carter tells you the answer. It's a 150-day moving average. So you're not even playing with the same type of charts that everybody else is. That's why I'm telling you, your charts might not be good. They may be worthless because your charts are only going to be good is if your charts are equal to charts on Wall Street. Okay. Number 2, news. Where's the news been for you? If you talked about the news, you would have thought that the world was ending in AI, that AI is just it's done. That people are going to get rid of it. Nope. If I told you that jobs were going up because the job numbers came out this morning, 147,000, numbers were wrong. They were misleading, right? Did you check that? Did you catch that the majority of those jobs that were going up were based on education numbers? Did you catch that? Nope, because you didn't see that in the news. So is it the news that you're trying to follow to make sure you understand the markets? Okay, let's go into it. Let's keep going. Tweets. Well, actually, Trump hasn't tweeted much. In fact, what he's saying to you is, well, it's coming up on July the 9th. Now, we know today's a short day. All right, today's the 3rd. Tomorrow's the 4th. In the United States, it's July the 4th. Happy 4th of July, everybody. Friday is usually the day after the markets of July 4th. And they also don't tell you this. It's probably going to be low volume. So I wouldn't touch tomorrow's trading anyway. All right. So is it now based on volume? Because the volume is going to be low. Nope. Again, nope. It's not. It's not based on one thing and one thing alone. All right. Okay. I get it now, Bigbeat. I get it. So I shouldn't be thinking about one thing and one thing only. I shouldn't be just thinking about how the markets react based on a chart or how it's based on a news or a tweet. It's all of it, right? It's a thesis. Right? We know that AI isn't going anywhere. How do I know that? Because we did see some news. Microsoft laying off another 9,000 people. Howard and I talked to you about certain stocks. Cheesecake Factory. Cake is up 30% in the last month and a half. Why? Because of the whole Mounjaro, Zepbound, weight loss drugs. We told you that people aren't going to McDonald's. I said it on Schwab. Why? It wasn't because the chart said McDonald's is going down. Most people said McDonald's is good right here. Charts look good for McDonald's. Should go back up. Oh well, some of the analysts said that McDonald's should come down. No, and we wanted to help you understand that, right? Why did McDonald's come down? And I've said this. Why did it come down? Why is now that investors right now are trying to find dividend companies? They're trying to find undervalued companies. Why? It's exactly what I just said at the beginning of the show. It's the mispricing of pricing. It's saying, okay, you know what? It wasn't based on a tweet. It wasn't based on a news piece. It wasn't based on any of this. And so what did it end up being? It ended up being a few things. All right. The losses in when we look at McDonald's in general, people think of McDonald's as a food company or as a company that makes fast food. All right. General thesis there is if weight loss drugs are coming in, people aren't buying fast food because it's not as healthy for you. It's fattening, all of those things, right? Okay. That should push McDonald's down. Nope. It did. And we told you that. And I told you that months ago. That's why I don't like chasing. I don't chase the markets. I want to be the what? The ticker taker. I want to be the person that's at the door going in and the person on the other side that's going out. So when the markets were falling, Howard and I were showing you what to do in NVIDIA. We were buying when the world was falling apart, and now the market's making a new high, right? Because that scared money doesn't make money. And I tell you all the time, scared money doesn't make money. All right. Now, here we are on the flip side of this, where the markets are exuberant again. Man, you think I'm long in exuberant markets? Hell no, I'm not long. I'm short. Right? Oh, but the market keep going up, Bigbeat. The market keep going up. Yeah, because why? Oh, because the news said so. Oh, because my chart said so. Because the mean tweets told me so. None of that tells you anything. None of it. None of it. You need to think for yourself. And that's what we try to do at Quasar Markets with an education team, with real data, real AI. We're not making the AI up. We're just pulling it out of our behinds like some companies and hoping and praying that you'll listen and look at data from the past and hope that you understand the future. There's a reason why I say the past does not emulate the future, because it doesn't, right? You can see patterns. Great. And hopefully you do in charts. And I love charts. Everybody knows that. I probably love charting more than the average chartist. I've been charting since graph paper and pen. But that's not the answer. The answer is not tweets. The answer is not mean tweets. The answer is not, oh, the president said buy this. Oh, this is the news today. We should do this because of what the news says. The news doesn't say anything to you. Okay? The news explains one thing to you. What's happening at that snapshot, at that very second, at that very moment. Because tomorrow that news may be different. What did I say of Nike? I said Nike's down. It's getting beaten up. Nobody likes Nike. Oh, well, it's Bigbeat. The reason Nike's down is because of all the issues going on with the trade. It'll get fixed. Are people stop wearing Nike shoes? There's your thesis. They're not. Nike told you that. And the CEO told you that. Yes. It's been rough in the last few months. We understand. I mean, that's what he said to you, right? We understand this down. We totally get it. But what happened to Nike? Nike's up. I tried to save everything to a lot of people, right? I mean, it's just crazy, the sheer number of what's going on right now in the markets. And zero DTEs, give me a break. They're skewing the market and they're getting burnt. Do not let those people with zero DTS say that there's a problem. Right? It's not that at all. It's not that at all. What's happening right now in the markets is exactly what I've been saying. You need to have a thesis. You need to, as an investor, understand exactly what it is that you're investing in. I had a person the other day said, I'm down 64% on Circle. Great. Sorry to hear that. What does Circle do? I don't know. Then why are you investing in it? Explain to me, as if I'm a 5-year-old child, explain to me how the company makes money. I don't know. I don't even know how it makes money. Then why are you investing in it? It's one of my rules. Invest in what you know. And if you understand the world, you understand that point, which is why I'm trying to bring Quasar Markets to you, so that you get a good picture of every country, of what's really going on around the world. Why is this happening? Nike's up. Nike CEO said, yep, we'll fix it. And guess what? Tweet comes out from Trump saying, guess what? We're going to have a deal with Vietnam. You didn't know this the day of. You didn't know what Trump was doing, unless you were dear friends like I have dear friends in the White House. I knew it. Did you know it? Probably not, right? But you have all of the clues there in order to make that happen. And if you were looking at the charts kept saying Nike's going to keep going down. It ain't going down. People are still wearing Nike shoes. What's the percentage off at these stores? Over the weekend, I saw 70, 80%. If you're seeing a company saying 80% off, probably not doing so well, right? Is that a reason to buy a stock because the company's doing terrible? Probably not, right? Did you see a tweet on a company? Nope. Do you see a mean tweet from the president saying XYZ company, we should short it because they're a terrible company? Nope. They're down 80%. Why are they giving 80% off on things? 70% off, 60% off? They're doing it because they're hurting. Why? It's your job as an investor to figure out exactly what is going on. It's your job as an investor to not just understand what you're buying, but it's also to understand how you're buying it. What does that mean? Well, very simple. All right, you have your thesis. For me, it was very simple. I thought Tesla has a very good, yes, mommy and daddy are fighting. Get that. Tweet after tweet. Did those tweets change the world? Yep, it did. Did the charts change it? Yep, it did. Did anything change in the numbers? Yes, they did. Elon told you the numbers are coming out are worse than expected, but we're going to change it around. Stock goes up. Why? Because it wasn't about the number of cars. It wasn't about the tizzy between the president and Elon. Dumb money sold. Smart money bought. And that's what happened. Why? Because the thesis hasn't changed. Robotaxis are coming. Going to handle another $500 trillion to the market cap of Tesla. Because that has nothing to do with a tweet. Nothing to do with the fundamentals of the stock. In fact, the fundamentals are not looking too good. Actually, I think the stock's overvalued. But that isn't what the stock was about. The stock was about a thesis. And so many people are missing the forest because of the trees in front of them. And that's what makes a terrible investor, a terrible trader. And as I always say, a good captain is not made in bad seas, or in good seas, made in bad seas, right? Let me say it again. A good captain is made in bad seas. What does that mean? Well, if you can't, Warren Buffett told you clearly. He said, look, if you can't handle a 10% down in your stock, you probably shouldn't be in the markets. You need to be able to understand risk, reward. Or if you're not learning risk and reward with all of these things, then you're also having a problem. So there's your 5 theses for today, your 5 themes. Don't right now worry about your charts. Your charts are pretty much worthless, to be honest with you right now. Tweets. Make sure you keep up with them, but they're not controlling the markets. News. Make sure you're on top of the news, but it's not controlling the markets right now. If that was the truth, the world would be ending today, right? We would say, oh my God, China, oh my God, Iran, oh my God, what's going on there? Man, the world would be ending, but it's not ending, right? Then you need to look at the last part of all of this. When I looked at the stocks that I was interested in trading over the last few weeks, what was it that I was looking for? Okay. First thing as traders we look for is volatility. So we have to understand volume and volatility. How much volume was running through those stocks? We have all that data, right? We have all the volume data. We have all the volatility data. So you have all of that for you. All right. That was one. Number 2 is I was looking for what? The same thing I tell you all the time. What about write this down? Write this down and put this on a piece of paper and slam it onto your computer. Put it up in a monitor somewhere. I have these things. The markets are about the mispricing of pricing. Okay? This means that you buy and you short and you sell and you buy options and you short options and you do all the things you do because you think the price of that equity isn't right. So it's the mispricing of pricing. You think that the price of whatever that you're trading is wrong. Now, you have to figure out which direction it's going to go to make money. Isn't that correct? Russian President Putin says he will talk to Trump today. Did the markets move? Nope. Right? That's my point. I'll post that up here too. Because I'll get it in here for you. There you go. Did it move the market? Nope. Why? Because we don't know what the President Putin is doing. Do you know what he's doing? Heck, I don't even know what I don't even freaking eat breakfast. I don't even know what I'm going to have for lunch or dinner, right? That's what I'm saying to you. You have to think about, as an investor, what it is that you want to invest in. Now, lately, and even on TV, I've been saying the same thing, that technology is what's been getting us out of the problems. All right? So when I got back to the very beginning of all this talk today, and me being on the soapbox today, is to tell you this. We are overvalued. The Buffett indicator tells you that we're overvalued. The GDP of the United States divided by the Wilshire 5000, we are at uncharted territory numbers. Can the markets go higher? Yes. Do I personally, as Big Beat, think the markets can go higher? Probably. It's unfortunate, but I'm shorting the market, right? Look, if we all remember the movie The Big Short, and the markets, how they were, they kept on going up, even though what was going on behind the scenes was not good. Dan Niles told you this. By Thanksgiving, the markets could be really bad, right? Because as fundamentals come in, as the technology starts to wane a bit, we know Apple not quite innovating. We know that. We know all of these little things that are happening. AI is moving very fast. A lot of things going on, right? That's the thesis that I have. I agree with him, and I think that's where we're at right now. All right, let's get to the markets. I'm off my soapbox. I hope that helps everybody a little bit. I'm glad to be back. I've been in Ireland for the last week. I had a wedding to go to, but I can tell you that the market's not as good as you think it is, folks out there. I've heard quite a bit. Oh, everything is great, Steve. Everything is just fantastic. It is not. I'm going to pull up McDonald's for you. That is the biggest drop in McDonald's history, and we nailed that. And look, this chart, probably a charting system you don't even have on your charts. I have it on my charts. I think McDonald's may be slowing down. You can see a little bit of a buying down here, and you can see a little bit there too as well. We'll pull up the QQQ. There's the QQQ as it's pushing up. See right here, I'm looking at QQQ. We are way out of the boundaries here. I don't like this. This is overbought territory here for me. I'm not liking these numbers at all. Do I think it could go higher? Yes, I do. I was asked about Circle the other day. We'll pull up there you go. I was asked about Circle, what people thought about Circle. No. What stock did I like? As you all know, I liked Nike. I've liked Nike for now 2 months. Look at the stock price. You'd be buying it in the 50s and dumping it. Do I like Nike here? If you're looking at your charts, what have I told you? Charts are kind of worthless right now. You have a big open space here. So, yeah, you can keep pushing on higher if that's your chart thesis. For me, it's not. My thesis is that people aren't, that the holidays are coming up and people can get new shoes. Education, right? We just saw huge numbers of education numbers coming in. That's news. Wasn't one thing, wasn't a lot of things. It's a mixture of things, right? Good morning. Good morning. Good morning. Good morning. Good morning. Why? And then let's keep on going here because I know people are asking about certain stocks here. Tesla this morning. Look, Tesla numbers were down. We all know that, right? Look at that. Popped up. Pull it up here a little bit for you too. Up another 1% here. For those of you who know, I was buying it under the 290 handle here the other day. I crushed that right there. Thinking about it again, I've said maybe could do it again because I don't care about the tizzy between Trump and Elon Musk. It's nothing to do with that for me. This market seems to be overbought. All right, and let's look at some other stocks here. Intel with this new chip sector situation. Why would I not be buying Intel? Because I still don't believe in the system here. I don't believe in the thesis here. If everything is great, markets are open now. Why is it only up 0.5%? Right, your charts aren't showing you that. There is a buy signal down here, but I'm not really showing that. Look at that, it's the selling. I'm not showing that either. We'll pull up a 1 minute chart here for everybody, so they or a one second chart, so we can see the markets moving in real time. There you go. There's your 1 second chart as it's kind of pushing up a little bit. I'm not really understanding the buying pressure here yet. So when I don't understand something, then I don't like it, right? Keep my eye quite clearly on this. There you go. There's your selling a little bit. Watch this right here. I'm going to pull it up a little bit for you guys. Hopefully I can get this to you. Here we go. Let me pull something up for you. Here's the spot. I'll pull up a 1 hour chart. For those of you that love your charts, let's do that. You're in unknown territory. Why are we going up? Don't know. Is it going because of tweets? Nope. Is it because of news? Nope. Why is it going up? Well, in a lot of facts, there's a lot of things going on behind the scenes that most people don't. We talked about window dressing, right? We talked about how institutions were just holding things and then dumping things on the next day. Why are things pushing up here? Well, to me, there's this feeling of rush that can't believe I'm missing out. It's the fear of missing out, that FOMO that we all hear about, right? And that's what's happening right now. We're seeing the fear of missing out. I've got to be in the market because everybody else is in the market. Well, let me tell you what institutions they love FOMO. They love it. Why? Because they don't have to do anything. They're already sitting on all of these investment positions, right? They can just sit back and go, okay, thanks for the money. And you know what? I'll push the sell button and you'll never know it. And that's what we call rug pull. That rug pull is coming. Is it coming today? I don't know. Is it coming Monday? Dude, let me tell you, my crystal ball right now, and I have 2 of them in this office, they don't work. That's why I have them in the office. They don't work, right? We don't know, but it will happen. Let me pull up a monthly chart. All right, here's a monthly chart of the SPY. So for those of you guys who love your charts, let's pull a monthly chart. Now I'm going to go back. I'm going to pull up this time frame. Now, y'all remember when the markets crashed in 05, 06, 07? Nope, they didn't. When did they crash? Was it 08? Oh, it was 08. That's right. It was 08. It wasn't 08. That's 09. It took a whole year to crash. And people look back on that time and say, oh my God, it happened overnight. Oh, no, it didn't. No, it didn't. In fact, some of the biggest pops happened in 08. Look at these. These are some big numbers to the upside. But what happened eventually? The selling continued and it exacerbated and it scared people. It didn't even happen until September of 08. The crash of 08 didn't even happen until the middle of 08. Didn't happen in January. There's October of 2007. There's December of 07. Now there's your first bit right there. There's your first and second month. And there's a little bit of selling. But it wasn't until the middle of the year. So when I tell people, oh, this is going to be a pullback time, it could still go up. And even in that first pullback that happened at the beginning of 07, it still pushed up, but not that much. Why? Because the big crash was coming. That's the difference. That didn't happen because of a tweet. That didn't happen because of a news article of 1 minute. That didn't happen because of a thesis. It happened because of fundamentals. So each market crash is different. Now, I'm going to fast forward. Remember 2019? Remember 2020 and 21? That was COVID. Right? Here's the selling. Look at that. Boom. Didn't happen overnight. Took them a year. Didn't happen overnight. And even in the bad times, even when the markets were crazy, the flush of cash on M2, right? The money supply, the velocity of money was being pushed into the markets. That pushed the markets up. But in 2020, the round of COVID happened. Wasn't because of a tweet, wasn't because of news, and didn't happen overnight. Remember, this is a month. It took 3 months for another crash to happen. Right? Okay, do it again. This is what I mean. This isn't about your charts. If you think you're having problems understanding your charts, it's because your chart's too tight. Okay? Let's go again. 2021. What was the reason? You might remember what the reason was in 2021? Was there a big reason around 2021? Look at that. 2022. A year later. It didn't happen overnight. The crash didn't happen overnight. It took some time. Let's do it again. Boom. Now what happened? Look at that. Remember that? April 1st. Look at that. Look at that big old sell signal. But what happened? Market pushed back up. Was it charts? Nope. Was it a tweet? Nope. Was it news? Nope. People got scared. They were running for the exits. Okay? They were running for the exits. When did I buy? Down here. because it was capitulation. I remember it. I remember going on several shows saying, whoa, 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 capitulations happen. Oh, no, but we can go lower because my chart said so. Nope, it didn't happen. Nope, wasn't because of a tweet. Nope, didn't happen. Why? The thesis was the same that I had. Capitulation had happened. Fear of missing out happened. I got to get out because I got to get out. I didn't. I bought more. That's why I'm up 64%. Right? I didn't get nervous. Now, if you look at these blocks to the upside, these big blocks, there they are again. There they are again. What happened? We are consolidating around this area. Now, if you want to use your charts and you want to tell me how great your charts are, show me your charts and I'll show you how you're wrong. But look at this. We broke out. All right, there's the SPY. We know we broke out, so they're buying more. They're buying it. What's going on up here? If you're looking at your chart's telling you that we're overbought. Your RSI is telling you you're overbought. Your MACD is telling you you're overbought. Your RSI is telling you you're stupid. You're overbought. But that doesn't mean we can't go higher. Because we are. We kind of are. But what do I think? All right, let's tighten the charts up just a bit. All right, let's pull up a weekly chart. Now, when the capitulation happened, right, back in April and May, and in April, that big capitulation happened. Everybody got scared. This is why I bought. This line right here told me everything I needed to know. All right, so yeah, I used my charts. But Bigbeat, you used your chart. Yeah, I did. I totally did. Right? Not many people had this big freaking blue line on their chart. That blue line is not a DMA. It's not a chart based on Bollinger Bands. It's not a chart based on any kind of my band. My line. I created. Why did I create that line? Because there was the capitulation that happened in 2023. There's the capitulation that happened back in 2022. There's the capitulation. You see the line? It just keeps on going. I can keep pulling it all the way down. That's the capitulation line. That was the nonsense line that I'm looking at. Okay? That wasn't because of a tweet. Wasn't because of a news article. None of it. It's because stupidity was out there. And I take advantage of stupidity. And we're seeing it now. Right? All right. All right, Bigbeat. You've got all these numbers. You've showed me your line of why you use your chart and how you use your charts. And you'll see I've got lots of charts. I got lots of indicators. So it ain't like I don't like my charts. I love my charts. But I'm not relying on them. They don't say, that's why I got to buy. That's why I got to sell. Because my chart said so. Your chart ain't saying goddamn thing. Okay? Your chart's telling you where the markets have been. The charts tell you where the liquidity zones are. Okay? It tells you why things are where they were. They don't tell you why things are going to where they're going. All right? So get that in your mind. And I've been doing this 34 years. I'm going on, God, 35. Look at this. When it broke out, there's your breakout lines. Okay, now that is normal charting. Breakout lines say yes. Was there a tweet that happened that said it, that we're going higher? Nope. Was there a news article telling that why we're going higher? Nope. Now, what if I told you that none of this is going anywhere because of any of these reasons? Money is flowing internationally because of the bond market. Anybody explain me the bond market to me? Probably can't. I worked the bond pits. I know how the bond market works. So when the bond prices are starting to deflate, which they had been, and of course we saw a pop now, 4.328% on the 5-year. If you look, the markets aren't even moving at all really today, right? Look, why is this going on? What happened? Why is the rates going up? Well, rates have to go up to attract more investment. When rates come down, they don't need it because they're getting money in. They don't need to pay you more. They can pay you less. You're going to buy it. That's supply and demand, right? When the interest rates go up, that means they're having to send out more money. That means the appetite for risk is high. We just found out from the very first thing I said this morning was the Buffett indicator is so out of whack. Now, President Trump and Putin are going to speak at 10 a.m. this morning. Are they going to be friends? And that's the market's going to go higher because of that? Maybe. It's a news article. Maybe a tweet comes out. Maybe the charts look better. Nope, can't be charts because charts are out of the whack, right? Is it the Wilshire 5000? Nope, don't know. Is it oil numbers? 67.29 the barrel. Tells you recession's here. Tick's right at 100. It's flat. It tells you people don't know what's going on. So they're going to do what's been. I heard this several times, and I don't even understand why people say this. It's what's been working. The trend's your friend. Trust me, I know every adage there is on Wall Street. In fact, I've invented a few of them myself. People still talk about it and still say, and they're things I've been saying, right? That's not what you want to do as investors, as traders. As a trader and investor, you need to become more well-rounded. You need to understand how the markets work and why they work. And not because of a tweet or a chart or this told you because your taxi driver told you to buy something or you've got a hot stock tip. Good God. If you believe that, I can tell you times the 80s, everybody had a hot stock tip, right? You need to do it because of you. You need to be a better investor. And don't be buying things that, oh, I bought it because I saw a talking head say I should buy it, including myself, because I say or I like something. There's not a reason for you to invest in that. You need to understand your markets. You need to understand, and you don't need to be the master of every market. You need to be the master of what you know. What is it that you know? If you are a farmer and you're trading biotech stocks, that is the goddamn dumbest thing I've ever heard. Because you don't understand the FDA process. You don't understand the biotechs. You don't understand the CEOs of those companies. You don't understand how approvals of that drug happens. You don't even know the distribution lines. Why are you investing in biotech? You shouldn't be. This market gave you some really easy plays. If you're not crushing it, then you didn't understand the market. Okay? Boeing under 200 was a great play. Why? Because planes are not coming up off. They're still flying. You saw weapons being shot off in Israel and in Iran. Drones. Raytheon. We talked about it on here on this show. How many times have we talked about it? That, to me, is a thesis. That means more are being bought. The price goes up because of, I don't know how else to explain it. It's just common sense. And that is what it all boils down to. So if I want you to walk away in here in about 15 minutes, I want you to walk away from the show going, you know what? I'm no longer tied to my charts. I'm no longer tied to my cell phone because I can't wait to see what the next Truth Social or tweet from Elon is going to be on Twitter. I can't wait to see whatever the news cycle has. We don't want that to happen for you. I want you to become a better investor and a better trader and make money. The whole point of this game is because you don't even have to trade. I'm up 64%, and I didn't even trade 6-7 days of the last month because I made decisions based on what I felt was prudent. I want you to write this down. I want you to put this down. On the other things I've told you to write down today, write this down. 2 words. Common sense. That's it. Common sense. S-E-N-S-E. Sense, as in your mind. Right? God gave you one of these. Use it. All right? Your mom and dad popped it out. Use your brain. Right? Why is Circle going down? They don't even know how they make money. If they don't even know how they make, they're stable coins. So why are you investing in it? You invested in a biotech stock that you know absolutely nothing about, or the drug, or what they're even trying to go after. Silly. Are you on the floor of Tesla building the car? No. All right. What are you listening to? Whatever Elon tells you to listen to? Great. Whatever Trump tells you to listen to? Great. And take it all in. It's okay. It's okay to focus all of that. We have an AI to help you focus that too, by the way. So if you want to put all those data pieces into it and then focus on that, great. Absolutely great. Do that. But common sense. Common sense. If you see you're walking down the street and you're in the shop and you see 80% off at the store, is that company doing well? Yeah, I can't wait to buy this shirt because this company's Abercrombie and Fitch doing great. No, they're not. No, they're not. 80% off. I mean, they're doing well. Common sense. Bombs going off in Iran and drones are going off. Who are the makers of those parts? That's called common sense. McDonald's. fewer people are eating that food. Why? Because people are taking the shots. Look at Eli Lilly. Let's look at that. Let's look at Eli Lilly. Let's look at a monthly chart. Eli Lilly. There you go. When Eli Lilly told you back in 2022 that they were working on weight loss drugs you didn't even know about, right? You didn't understand it. Were you waiting on FDA approvals? Were you waiting for a mean tweet? Nope, it didn't tweet back in 2021. What were you waiting on? Charts? Your charts are empty. Look at that. They were consolidating. Look at that sell-off there. But all of a sudden, they found out that they had a pretty good drug. And they didn't know what they had. Let's look at another one. Pfizer. Look at this stock. Does anyone know what Pfizer made? Can you tell me what Pfizer made out there? Yeah. The very thing that Hims and Hers uses on a daily basis. Viagra. They had a heart pill. They're making a heart pill. Went up. No chart told you that. No news told you that for trading that day. It took a little time. But then they realized they had a killer drug. And literally, it went straight up. Look at that stock. From $10 to $35. Tripled your money in a year. Tripled your money in a year. Didn't take options to do it. Didn't take news. Didn't take a tweet. None of that. It was, oh my God, more people are going to have erections. Boom. Stock goes up. Called common sense. Now, here you are. Pfizer's got a lot of drugs going in. Look at this. There's your charts. Your chart's telling you right now. Look at this. But there's no news on Pfizer. There's no tweets on Pfizer. None of that. What is it telling you? Does Pfizer have some drugs coming up? Very much could be. Services PMI coming in at 52.9 versus 53.2. There you go. If services PMI gets under 50, it's contraction. And we're a services country. No tweet came out. That was news. Did it move the market? Not really. We're watching it in real time. There you go. There's your 1 second chart. Didn't really move much. This is what I'm saying to you. We need to start getting back to basics. That's what I've always said in the world. It's about getting back to what we know as investors, right? In the 80s, 70s, and 80s, no one invested because of a tweet. Oh, but the market's faster, Steve. The market's, I know. I helped invent half of the technology you're all playing with. I know. I'm Steve Orr, right? What's the difference today than before? The difference today is that emotion is much quicker, right? That's why I'm telling you to get rid of all of your fast charts and get rid of your news, breaking news, and put it all together and create a more bigger thesis. You'll be a better trader. You'll be a better investor. And you won't be going, oh, I can't tell my wife or my husband how much I lost this week because of these problems. You won't have to. Why? Because you as a person will go, you know what? This is why I invested in it, and I'm sticking to me. Why? Because you're the person. You're the one who learned. You're the one who got educated and understood every aspect of how the market works. Right? When someone asks you, well, why did you buy that stock? I can tell them in detail. Well, it wasn't. I bought it because of a tweet. I bought it because of a news article. Oh, I bought it. No, here's why I did it. Well, to me, the chart looked this way, and I saw a news article, and I saw this, and I saw that, and I saw the volume, and I laid charts on it based on volume charting, not just regular charting. I didn't just use what everybody else was using. I'm different, and that's what I want to do. I want you to be a professional trader. You're not a professional trader until you actually use professional tools and professionally trade. Right? You're retail. So am I. In a lot of ways, yes, I'm professional. I get all of that. But I can also tell you, look, the market hasn't really moved. And this is supposed to be great news. Trump bill signing ceremony has now been pushed to 5 o'clock tomorrow. Boom, look at that. Did the market move that much? Nope. Ignore the noise. You need to become a better trader. When I look at the biggest and best traders in the world, Peter Lynch's of the world, he wasn't waiting on a news article or a tweet from Trump. He knew that he went into the line in the grocery store and saw pantyhose in a box. He knew, oh my God, people are going to like that because of convenience. He came up with a thesis. Right? That's what you need to do as an investor. You need to come up with an idea. Tell me what it is. Explain to me, how is it that you got to that position? Why did you do it? If you can't tell me you're in and you're out, your exit point, your intro point, if you can't tell me those, then you shouldn't be trading. And I'll be honest with you. And I want everybody to trade. I want everybody to make more money. I want them to understand the markets. All right, I'll get out of here. It's 10 o'clock. I know we're past the hour here. I got about 8 minutes down to the top of the hour. Lots of data today. I'm going to make it short. I've got lots of meetings. I just got back. And look, I can tell you right now, the airlines are hurting right now as lost luggage and the trains aren't running on time as much. So be careful out there when you're doing that. Just want to remind everybody today, the markets are closed early today, which means that a lot of people are already gone. So be careful out there as well. Oh, I really want to appreciate it. Hey, wow, look at the numbers today. 1,100 followers. Hey, love that. Make sure you're retweeting and following us. I'm here to help you, right? I'm here to make sure that you don't make those mistakes that I made 30 years ago, right? And trust me, I made a lot of them. And over those years, I'm going to give those answers to you and show you how it really works, right? A lot of people are just looking for clicks. A lot of people are just looking to sell you something. And I am too, by the way. I'm not gonna lie to you. But $15 a month is not $100 a month. Look at all the fintechs that are 80% off, 90% off, 60% off. I saw all the emails. Oh, it's a July 4th celebration. Woo! Buy my product because I'm on celebration. Stop it. Just stop it. We don't need that. Bloomberg doesn't have sales, right? Build something that's quality. People will be there. Create a thesis. You'll understand yourself. And the last thing I'll leave you with, and I think a lot of people miss the boat sometimes on this, is that even if you make losses, and you're going to make losses, and you're going to have wins, and you're going to have some big ones, and you're going to have some losses, and there's going to be some big ones. And all things that you do, know yourself. Put a big sign that says, and that's another one. Put another one. Know thyself. If you know you're not a good trader, you know you got problems, you don't really understand charts, learn them. If you like charts and you're good at charts, you don't know the news, get it up there. Learn the news. Learn how. If you don't understand tweets, create yourself a tweet deck. Learn how it works, right? Because I want you to not just grow as a trader. Growing as a trader is one thing, but you need to grow as a person, as a human. The humanistic side of yourself is what will make you a better trader. If you know that you are a crazy trader, you're emotionally trading, if you know that you're trading and you have problems, correct them. You've got time. Time is I get asked this all the time. What's the most valuable commodity on the earth, Steve? Is it uranium? Is it platinum? Is it gold? Nope. The most expensive commodity on this planet is only one thing, and it has been this way since the beginning of time. Time is the most precious, most expensive commodity on the planet. Do not waste your time. You're not wasting your time if you learn how to chart. You are not wasting your time if you learn the news. You are not wasting your time if you learn about yourself. You're not wasting time if you learn about how to interpret tweets. That's the best way. That's how you should become a trader and what you should do. And when you learn those aspects of it, it'll give you a much better, cleaner picture for your thesis. That's why I don't get nervous, as I have a very clean thesis. Now, for those of you who don't know, I've sold my Palantir, bought it at 35, dumped it way up there. Why? Because I think it's overvalued. Why? Did my charts say that? No, because charts are out of whack. Did my news tell me that? Nope, because now everybody's bullish on Palantir. Did my tweets say that? Nope, there were no tweets on Palantir from the president. told me that because I had a thesis that the government was going to give a lot of contracts to Palantir, and they were going to happen, and they were learning AI, and they were moving fast. Worked out. McDonald's, biggest sell-off in McDonald's history. Why? Gave you the thesis. We gave you the thesis. I didn't give you the thesis the day of, or wait till a tweet came out. I gave it to you months in advance. You had a ample opportunity to sell in short. And even on show, 3 or 4 shows talked about it. Right? Okay, you tell me all this big beat. What's next? We talked about quantum computing. Look at quantum computing. Some of these stocks are up 3,000 and 6,000%. Not by options. All right. What are you investing in? I'm not. I'm short. I think the market's overvalued. Why? I think there's some things we're going into. We're going into we call the summer doldrums. A lot of people don't understand that. Learn it. Learn the news. Learn the tweets. Learn all the things, right? Learn seasonality. Learn all these things, and you get a better picture. So my picture right now is telling me I think this big beautiful bill is not that good. Elon Musk is telling you that. I also telling you that I think that the debt's going to go higher. I think there's a big tizzy between Trump and Powell. I think we'll have a new chair, which is probably not good for the markets. The markets don't like that. They don't like uncertainty. No tweet, no news, no chart told you any of those things. It's just common sense. Common sense. Again, write that letter down. Common. Write that word down. Sense. CS if you need to. Put it CS, those 2 letters. CS. Common sense. Common sense. Common sense. All right, here we are. 2 minutes, top of the hour. I'm off my soapbox, but I hope to give you guys a little bit of clarity. I would have been thinking about over the last couple of days about the markets in general. It's easier when you see away from it, what the markets are doing. And I do think that a lot of times we get lost in the weeds. And sometimes getting lost in the weeds means losing money. And I don't like people losing money. I want people to make money. All right, from all of us here at Quasar Markets, we'll see you right back here on Friday. As tomorrow's July the 4th, the markets are closed tomorrow. But we know the Bitcoin market's still going. So crypto market's still going. It doesn't stop. And we'll start seeing those markets also. But markets haven't really moved much in the last hours. So with that being said, I'll let you guys go. If you have any questions, come hit me up. You all know how to get a hold of me. But much love to you, and much love because I've seen Quasar Markets growing. Love that. Love numbers, seeing those numbers popping up there. It looks like we have just got hit an all-time high now with viewers. I love that too as well. All right, from all of us here at Quasar Markets, we'll see you right back here on Friday.